Good afternoon, traders. This is Christian Farmer at Strategic Trade Group, and this is your end of day market recap for Thursday, July 11th. I'm going to talk fast in this video because I'm on location, traveling a little bit, and I'm working off a couple laptops, which the battery is not that great when I do this. So because I'm running multiple screens right now, but. What I'm going to do is I'll talk a little bit about today's price action and what transpired today. We'll talk a little bit about what happened with the CPI report and what the implications are of whether what the Fed fund futures are implying in terms of cutting interest rates and some of the, all these crazy moves that we saw today, right? Of course, the word of the day, I think, is rotation. I did not do an end of day video yesterday because again, I had a drive to do. But one of the things that like I talked about all day yesterday was just what could happen on with the CPI numbers and just the sensitivity of the small caps on CPI days. And I try to spell this out, and I put this on Twitter as well. But let's see if I can find it really quickly. I talked about this so this is Wednesday. Yeah, this should be in here. Let's see if I can find it from yesterday. Ah, now it's going all the way back. Hold on one second. Let me find it. All right, here's what I was referring to is just how much more IWM moves on CPI dates, right? So SPY again, today was a decent move. It was down 80 basis points, but obviously, IWM stole the show today, up 3.6%, and that's a big move. Remember, going back to February 13th, there was a move in the other direction by 4%. So the CPI data, it's not to be, overlooked in terms of what it does to IWM and the rotations that it could cause if the number's different than expectations. And I think what compounded today uh, was just the fact of how this market was kind of positioned into today. Over the last month, we've seen basically the Qs just go absolutely crazy, and a very few amount of stocks that really led the charge. Obviously the big names that everybody talks about, the Magnificent Seven names, right? They had sorry, this is the weekly chart, but they have had a huge move. AI stocks have had a huge move. Software has been in the mix a couple times, but the semis were up 8 days in a row, 8 days. So it does remind me. I know some people like Jim Cramer, some people don't like Jim Cramer. It doesn't matter what your opinion is. One of the things that he says is bulls make money, bears can make money, and bulls gets sorry. What is he? Pigs get slaughtered, right? Sorry, I'm listening to Bloomberg in my ear too. So bulls make money, bears make money, and pigs get slaughtered. So that's a situation when you have something that goes up 8 days in a row. Now, so I'm going to come to the defense of people who have been riding the semiconductors for a good portion of this year. You've done really well doing that. Notice, by the way, the RSI divergence on the last high that the SMH made. There was a lot of those divergences too that could be seen, but people have had huge years following what the Magnificent Seven have done. I call them Great Eight, but what the Magnificent Seven names have done this year and what the semiconductors and NVIDIA has done. So there's no reason to be critical of that. It's just the fact of that if you've been following those trends all along, all year long, sometimes you are going to give back some money if you've been still in those names once there's a reversal day, and this happened very similarly over here. Today was a bit more of a reversal day, but it also happened here. So, and this recouped and so forth, but it's just a question of like, how greedy are you going to be into these moves? And and so on and so forth. And so I think today, not only was it the CPI report that came in later than expected, which causes a shift and causes IWM to outperform, but it also has to do with just the positioning was basically very much all to one side of the fence. So what we talked about yesterday was just that there was an opportunity to maybe play IWM to the long side, and we did see some bullish option positioning in IWM. We saw it like about a week or two ago, and then we saw yesterday that there was a good amount of IWM calls. I mean, so that's where besides, because I'm very much a trend trader and I follow trends and I try to stay in trends for as long as possible. But when things get as overbought as they were, and one of the things that I talked about this morning prior to the CPI data in my morning note was that the RSI was an 80 for the Q. So when you see this, and I go over these in my end of day videos, and I pull, I always talk about if there's an indicator on your charts, it should be able to help you in certain situations. So for instance, when I see the Qs get to around a high 70s and 80s, I begin to take off positions because it's just too heated. Again, the RSI, which is on the bottom of your screen, is very different for single names versus the indices or ETFs, right? When single names get overbought, you actually want them to get overbought and stay overbought and trend, right? That's where you can make a lot of money when that happens, right? But for the indices, for when Qs or when the S&P gets in that mid 70 to 80 range, it usually doesn't stay there for very long. And so we saw this, like, we saw the exact same thing in the middle of June, and I had people tell me they're like, "Oh, no, no, that's a good thing when it gets overbought." I'm like, you just don't want to get caught, right? When there's a big reversal, and you don't want to really fight that, And I think too, looking at what the Qs are doing here, I think it could be a check back to the value area. One of the things I was watching today too was the top of the value area, which held for now. But listen, this is short-term support. It's nice to see it hold in there, come back in and if you're looking to short, basically what I would say is, watch to see if it breaks further into the value area. Another thing that I've been showing a lot has been this ratio between Q and IWM, right? This was, so here's what happened today. But this was a major breakout, right? You go back to like where this was like a couple months ago, right? Or excuse me, a couple weeks ago, right? Here's the value area for the year. So this is the weekly chart, and this is the break higher. But this also got this is a bit unsustainable, right? To have something like that occur. And this was the daily chart as well. So you notice that this is now indicating bearish. And I was showing this, I thought that this was the most important ratio to basically be watching today, because, there is going to be some reversals. And that was one heck of a reversal. Also notice the same thing as I showed you in the in the SMH chart, right? That the RSI made a bearish divergence. Right? What that means, by the way, if you're not familiar with a bearish divergence using RSI, it's when price makes a new high previous to the other high, and the RSI is decently lower. It's not, it's a lower level than where the last peak was. So that's sometimes also an indication of a possible weakness. And I didn't, today wasn't perfect for me. I know there's a lot of people who did really well with playing some trends today. I was long. We did have a long IWM trade, and I used a call spread for that. I put that on for I think 25 cents, and I got like full profits for that. It was a dollar wide spread, up to, so the most I could make was 75 cents on that. But that worked really well for a 1 day trade. Those options expired today, so that worked really nice for me. But I got caught in Tesla today. I really thought when we look at look at these names, I kind of nailed this pretty decently for the first couple hours of the day. I was saying the only name to really focus on in the great eight, because I thought that they could sell off, was Tesla. And I had mentioned in the pre-market session today for members, I said, be careful of tech because that is really overbalanced the other direction. So, and then of course there was news about Tesla and the robo taxi. So I took the trade off before that news hit, but I was up in a day trade, and I gave back money in that trade. So, these days I think are typically kind of difficult, because they are so outsized. But, the home builders, for example, right, up 6.2%. Now, does this mean, so I wanted to try to, being that I don't have too much time in this video left, I was just going to kind of go over what this did to Fed fund futures today. So first of all, I want everybody to be kind of realistic with this, right? I had talked about earlier in the week that there's about a 70% chance, and most likely, I think that the Fed will cut interest rates in September. But the question is, are they going to do any more than that? Because what are we talking about here? We're talking about 25 basis points, 0.25%. Right now, we're at 5.5. Do you really think 25 basis points is going to do that much to the market? So again, I think today had to do with positioning, where people were way out, over their skis with risk in names in the queues, and under owned and maybe even short IWM. I looked at the positioning in Russell futures, and it was a pretty big short position. So I think that had more to do with the actual numbers today, just that folks were just so off sides in their positioning. And when that happens, there could be very big moves like we had today. Because after this, it's a kind of a crapshoot in terms of, maybe we'll get one more cut that happens at the end of the year. So what does that mean? Well, that's 50 basis points. So you have to ask yourself, moving from 5.5% down to 5%, is that going to be, and again, what we're talking about here is short-term interest rates. This is the overnight rate. So when you could also look at TLT, right? And you could also look at long-term rates, which the Fed does not. People confuse this all the time. That's why I'm explaining it. But look at what TLT did today. We're just basically back to where we were in mid-June, right? And we kind of stalled out here. So this line that's in here, this gray box, which I'm going to bring up here, is the bottom of the value area. So I think that you're going to need more of a move in interest rates than what we saw today, both on the long end of the curve, this TLT, and the short end of the curve. But do I think this move in IWM could continue for a little bit longer? I do, because people were not positioned for it the right way, right? So watch this 93, 92 level for tomorrow, right? And we have the PPI report tomorrow. And, the other thing that I think is going to really come into play here is, so I just wanted to bring up this IWM chart, which will probably be the last thing that I want to do. Here's the weekly chart, and I have to say, this is good. If it could keep going, right? It's been such a mess for the last couple months. Um, so this is a real nice breakout of the value area with huge volume. I think that this could continue for a couple days, and maybe it even kind of, because again, the positioning is not big in this. And I actually saw more positioning in IWM and calls again today. So that's my thought. I think this can continue for a couple days, but I think that you want to kind of think about, selling into, not get really hooked into this until interest rates make a bigger move. But for short term, maybe we see a little bit further of a push here. And, and again, looking at a couple of the groups, which I went over in one of these videos, talking about biotech, right? I got long biotech yesterday, and the TTG trend. Was it yesterday or the day before in the TTG trend portfolio, right? The other area that you have to look at too is KRE, right? Because these are the two biggest components in IWM, right? Financials and healthcare, right? So that's what I would tend to look at. I don't know why this isn't allowing me to do that. And both of them had very big days, right? So you have to ask yourself, how much are these things going to continue? Another thing to think about too, right? So I got questions about, like, would you buy the dip today in the Qs? I think now what's going to shift once we get through the PPI report is earnings, right? And I did a Twitter space yesterday, and the subject was, sorry, one second, I'm listening to something in my ear. I I I did a Twitter space yesterday, and the subject of the Twitter space was earnings, and most of the panel was very bulled up about growth stocks. And I said, well, wait a minute. I said, I think, we're going to have all these earnings reports and a lot of times it's buy the rumor, sell the news into their earnings reports, right? A lot of these names run into their earnings reports, but I said, who's going to go long some of these names for earnings? right? Because everybody talked about how great Nvidia was for earnings and how great it's been in past quarters. But are you going to go long these names after they've run up this much? And when I posed this question to this panel that was all bullish on, growth stocks, I said, who's going long? I said, which names do you really want to go long for on earnings after these moves? And I heard crickets from people. And what I said to the panel too is I said I would be, considering it was an earnings subject matter and this Twitter space, I said I'm looking at other areas that are going to have earnings as possible, names that could, so I'm looking at the industrials. I'm looking at healthcare names. I'm looking at, a few. I said, I actually mentioned the home builders. I said the home builders have been beaten up. Let's see what they do. And the most people on the panel were like, "Well, you have a good point, but I only look at tech stocks." I'm like, okay, but this is an earnings. The subject is earnings, and I can't see going long any of these names after this run up. But in any event, this is just an exercise of, positioning. And when everybody's always on all one side of the boat, it usually rocks back and forth pretty heavily. And, I think that's basically why you had this type of a move, in home builders and some of the other areas today. Really under positioning, and and I don't blame anybody for doing that, by the way, because there just hasn't been a lot of things that have been working the last 2 months outside of tech. Now, again, these groups wonderful earlier in the year, right? In the back end of last year. But this year, the home builders, the industrials, healthcare, and some of the other names and financials, which did very well as well, they have not really, so financials are looking very good, and I'll leave you with a trade idea at the end of this video. But the financials have been going sideways too. They've been showing a little bit of a better, healthier chart. But what I'm referring to is this move, right? And when this was happening, tech really wasn't doing much. So it shifts around, right? And it rotates around. But I will leave you with Berkshire Hathaway. I think I went long this name. Oops, I don't know why this isn't working. Let's see if I can bring it up before Berk B. Come on. Berk B. There we go. Oh, no, that's not it either. Son of a. I don't know why it's. And I'm losing power. I don't know why I can't bring this up here. Burke. So I'll try to reload. Yeah, it doesn't. Oh, here we go. Here we go. I might be able to do it real quick. I think this chart looks really good. Sideways, 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 and breaking higher. I went long this name today. Guys, have a great night. See you tomorrow. Hope to see you in the trading room. By the way, if you like these videos, please like them and subscribe to the YouTube channel.